India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Kicking off a fresh new week. It's a Monday morning, bright and early. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me, my colleague Surbi and Nigel. Guys, hi, good morning.
Hi, morning guys. Brand new week kicks off and it's the week after, like you have the morning after. This is the week after the big fair announcements, and I guess bulls will wonder if this party can continue.
What about Coldplay? Anyone got lucky?
Oh, I didn't even try. And I've seen the concert once before, right here in Mumbai, so I think I'm good.
Well, you know, anecdotally, one is hearing somebody got somewhere. I don't know anyone who got it. I mean, actually, maybe one, but yeah.
No, I know people who got it, and then the same day they're saying, by the way, we have some extra tickets because others thought it's too expensive, so do you want to buy?
But
I said, I'm out of the game.
But, you know, even I'll have to try to get those tickets. But like Surbi, 7 years ago or so,
exactly.
I watched Coldplay live here in Mumbai. Just at the stage, you know, so I've had my fill of it, I think. I think just to pacify myself, I'll say, been there, done that. But if I get another chance, I'll do that again.
You know, I'll tell you guys, people who got it, I don't think anyone is going to admit they got tickets, right? Because the amount of hate they'll get.
That's true, yeah.
Anyway, you know, let's just sort of rewind the clock back and take you to where we left off on Friday, actually last week, because that is where we'll pick up from there and kind of take it forward. So I'll start with, of course, the big global story from last week, which is the fact that we got a 50 basis point rate cut, the start of a big global easing cycle. Hopefully, there's lots of questions whether the first cut is perhaps the deepest. We will see similar 50 basis point cuts or whether it'll be 25. But we got it started last week, right? And of course, I mean, the first day reaction was nothing, but as is often the case, day two after big macro events is when it really matters. So US equities were up 2.5% on day two, and here in India, we had a big rally on Friday. So, a non-recessionary rate cut cycle is generally good for equities. I mean, I think I made this point last week as well. A cut which is not needed is good. So we don't, I mean, many have argued that with GDP growth in the US tracking 2.5%, did we really need a 50 basis point cut? Perhaps no, but we got it. And that can't be all that bad. Over the last 40 years, and this is interesting data, Fed has cut 12 times with the S&P within 1% of all-time high. I think this context is important because, you know, when we see what markets have done after the Fed rate cut, it also depends what the starting point is. And I think the starting point gels with this data point, which is within all-time highs, 1% of all-time highs. Guess what? In all 12 of these times, the markets were higher 1 year later, and the average return is about 15%. So I think, you know, all kinds of statistical analysis floating around, but I thought this was interesting because this corresponds to where the S&P and global markets find themselves at. Now, Friday specifically was uneventful, not very much. Nasdaq was down about 1/3%. Dollar index, that's sitting at important supports. About 100.42, 100.79. This is the 20 weekly moving average, the lows of 2023, etc., etc. And I think a breach below this level on the dollar index perhaps accentuates fall. It's important for flows into emerging markets, so we'll keep track of this going forward. Fed speak, in terms of what Fed commentary and more officials who will speak will be important. You have the US core PCE data, which will be out this week. And I think, you know, it's labor market first and foremost, but inflation is not. It's also going to be watched perhaps at the number 2 level. Now, Nifty, it closed significantly above the upper end of the ending diagonal pattern, just circling the levels in. Very strong FI inflows on Friday. You know, this is even excluding the FTSE effect. I mean, you had that, 14,000 crore kind of number, but there's a large element of FTSE flow. But even without that, FI flows on Friday were looking really strong. Actually, things are picking up. If you look at even without Friday's number, flows were starting to accelerate in the month of September, going into the Fed rate cut as well. So it's interesting what the reaction function now is going to be. On the higher side, resistance now for the Nifty at 25,930, and on the beyond that, 26,125 is the weekly upper Bollinger Band. On the way down, hourly averages come as support, 25,454. And that's the 40-hourly exponential moving average. Bank Nifty is closed above its previous high at 53,357. Resistance for the Nifty Bank at 55,660. And on the way down, supports again come in at the hourly average, which is 52,690. We'll put some of these levels once again a little later. But these are, what looks like the path ahead for the market. Not all days are going to be like Friday. You'll probably get a bit of consolidatory kind of price action as well. But for those waiting on the sidelines, waiting for a pullback because the market's done too much, I think it's not a very wise thing. 170 points higher is what the Nifty GIFT Nifty implied open is indicating. So perhaps a big one once again. Remember, banks started to participate, especially names like ICICI, etc. There was a FTSE flow element, but Bank Nifty has finally made a new all-time high, unlike the Nifty, which did it sometime back. Surabhi.
Absolutely. And the question is whether that sort of bank big move will continue or not. We saw that in the FI numbers as well. To talk about markets in Asia, by the way, Japan is closed today, so no cues coming in from there. That's a big market. The others that are open, nothing mirroring this kind of a 170-point gap up that we're getting on the implied open. So let's see if indeed India can be the outperforming market today. The other central bank in focus today is going to be in Australia. Last week it was 4 of them, right? Fed, BOE, China, Japan. Bank of Australia, they're kicking off their 2-day rate setting meeting. So that's going to be a bit of a talking point as well. Now, the Nifty, remember, is just about 200 points, 210 points away from the next milestone, 26,000. And if the implied open is to be believed, we're just basically, a breath away, a whisker away from it as far as the gap up opening is expected. Last week, the Nifty put on 1.5%. The Bank Nifty is the one that really stole the show, right? It was stealing the march with a gain of about 3%. So let's see if this big bank trade, whether it'll have more legs, it'll have more durability. I think that's the biggest question of this week. As I was saying on the FII side, that bank exuberance and final outperformance is also showing up in the numbers, because look at the FII buy figure. Yes, there are all these index adjustment factors, but whatever it is, when everything put together, that's a huge 14,000 crore rupee buy figure. Domestic institutions were on the sell side on Friday. Just a couple of points, because we're talking about central bank action. So after all these global central banks, the question is, what will the Indian central bank do? We had some clues. If you go by the RBI bulletin to get a peek into the thinking within the RBI sort of thought leadership. Now, the bulletin is saying that the pace of disinflation remains sluggish. And this is provoking caution among monetary policy authorities. And that's the biggest question. Unless and until inflation comes down in a durable way, will the RBI oblige with a rate cut only because other central banks are doing it? That's something to sort of debate and discuss as we go forward. Again, that bulletin is saying that household consumption is going to rise as rural demand is reviving. And some vegetable price shocks have begun to reverse. So slight dovishness in that commentary that came in. And also they're acknowledging the fact that global oil prices have cooled off. And that might sustain. So again, if you want to be an optimist, you'll read a little bit of dovishness into those September sort of notes that came in from the RBI. There's plenty of action in the primary markets. Let's not even sort of look away. And big issues coming up, by the way. Over the weekend, news is that HDB Financial Services, they are filing for an IPO. And then the parent and the owner and operator of Hotel Leela, which is Schloss Bangalore, they'll be hitting the street with a 5,000 crore rupee IPO as well. So plenty of very interesting marquee names coming to the street. But gentlemen, I'll tell you, for me, the biggest news beyond the market, for the country as a whole, at least the headline was good, was the semiconductor, fabrication unit that's going to come up. It's going to come up in UP. It's a big one, and it's a tie-up with the US government in terms of, military applications, advanced communications, 5G, etc., electronics. And there's US government involvement in terms of, I think, technology transfer as well. So this is a really big one for the country as a whole, and definitely for the state of UP, which is, of course, where my parents and ancestors belong. So, yeah, happy moment.
Well, and 12 hours ago, I was in UP.
You were in UP, yes.
I was in UP. That's where my in-laws are. I was happy to be at the center of the action as well.
So much happening, yeah.
Better roads and things improving out there as well. I took a flight from Ayodhya back, so things on the mend. But let's get back to the markets. The Nifty Bank, that's been the outperformer. And we here at CNBC TV18 on Bazaar itself had mentioned on September 10th that maybe the Nifty Bank is bracing for a bit of an outperformance from here on after underperforming the Nifty in the last 1 year or so. And that's precisely the way it's played out. The Nifty Bank, in the last couple of weeks, well, it's been an outperform. The last month as well, Nifty Bank, courtesy HDFC Bank, well, that's been the big driver, and that needs to lead from here on. And mind you, the trend is up on the Nifty. But I think a couple of markers, 3 markers which I'll be pointing out, they look a little bit stretched in the near term. First up, the Nifty moved up, the VIX as well moved up. Normally, you have an inverse correlation between them. So that's point number 1. Point number 2 is the options data. The PCR has moved to around 1.5. Normally, we at around 1.6 odd, we see the markets cool off or go on for a phase of consolidation. So that's another marker, the PCR moving to the upper end of the range. And point number 3 is the FIs, they put in big money in the cash market, courtesy the FTSE rebalance out there. But also in the FNO market, they added long positions big time, close to around lakh contracts added on the long side, while they covered some shorts as well. And now you're getting a little bit uncomfortable because on the gross long positions, it's more than 5 lakh contracts. On the net positions, it's 3.5 lakh contracts, and it's increased substantially in the last 5 sessions or so. And countering them is the clients that are sitting net short with around 2.5 lakh contracts. All these 3 markers in the near term are suggesting maybe we should brace for some kind of consolidation, and maybe with today's gap up, taking some money off the table just for the near term could be wise. The trend is up, but these markers are standing out there. The level you're looking at on the downside, you'll see the trend is up, is a 20 DMA. That's the first reference point at around 25,200 odd. So mind you, trend is up. Nifty Bank needs to lead from here on, but there are a few markers that are looking stretched. I'm looking at 2 stocks. One is the one that comes out of the FNO band, Birla Soft, and we've seen tech stocks move around. So I'll keep an eye out on this one. It's seen a fair bit of correction from the recent peak. And the second stock I'm looking at is Arvind Smart Spaces. We normally don't talk about this cash market stock, but it appears, after a period of consolidation and a bit of a correction from the recent peak, the stock was moving high on high volumes. Even delivery-based buying has been seen in the last few sessions. So I'll keep an eye out on that one. It went to around 830, then it corrected to around 700. It's been doing nothing much, but the trading data suggests that maybe you could keep an eye out on this one as well.
All right, Nigel, thanks very much for that.